I've helped homeowners save millions. That's right, millions in mortgage interest over the past 25 years. It sounds pretty cool, right? But here's the flip side. I've also seen people make huge mistakes when refinancing. I've seen many people lose tens of thousands of dollars. So today we're diving into my top 5 pitfalls of refinancing. Stuff I've witnessed unfold firsthand time and again. So stick around because at the end of this video, you'll know exactly how to dodge these traps and save yourself a headache or at least a small fortune. So let's jump in. All right, pitfall number 1, trying to time the market. Did you know that mortgage bonds trade exactly like stocks? Every day, prices shift based on future expectations, economic trends, market liquidity. It's really quite a roller coaster. And timing it's like trying to catch a falling knife. You know, there are times in markets where trends are very consistent and long-lasting until something causes it to turn. Rates tend to trend lower due to markets expecting either a drop in inflation or some increase in economic stress. The problem comes when Wall Street begins to price in policy intervention or a renewed spike of inflation or positive economic surprises. Before you know it, rates spike 0.5%. And I've seen people wait for rates to dip just a little bit more and then lose out big time because the market moved too fast. Now, don't let that be you. If your refinance passes the 18-month rule, you may just want to consider moving ahead. And now for pitfall number 2, and it's a big one, falling for solicitations. You know, once you're a homeowner, it's like you have a target on your back from life insurance companies, warranties, and oh man, the refinance offers. It's insane. They'll say drop your rate by 4%, save $200 a month. Some are even disguised to come from your loan servicer. You know, those loan sharks are sneaky, but here's the catch. These are ads. It's not advice. Their goal is to sell you, to convert you into a new loan so they get paid. Maybe they extend your term back to 30 years for that lower payment, even if your rate goes up, while they tease you by taking cash out of $10,000 to $20,000 or skipping 2 months payments. Or those big online lenders that you might see in Super Bowl ads. They'll show you interest savings on a 15-year loan, even justifying a higher interest rate compared to what you have. And guess what? You could just pay a little extra on the loan that you have and save way more. No refinance needed. But why wouldn't they tell you? Because they're not your friend. To them, you're nothing more than potential profit. Beware of those teaser rates, equity assumptions, hidden fees, points. You know, getting a mortgage should have a disclaimer, borrower beware. Pitfall number 3, see it happen all the time, and that's refinancing with excessive closing costs. You know, it's easy to zero in on a rate or no cash at closing or a lower mortgage payment and completely miss the real price tag. Lenders love saying you don't need a dime up front, but then your loan amount jumps higher to cover it. Hidden fees, points, underdisclosed third-party charges, last-minute switches, it happens. And if you catch it, many people are already too mentally committed, so they sign anyway. Now ask yourself, how long are you going to keep this house? Will rates drop again soon? Could a HELOC beat out a cash-out refinance? I've got a whole video on the 18-month rule linked above to help you figure out all that math, so don't let fees eat your savings. Now, before I go into the next pitfall, if you found value in this video, please hit like and subscribe to this channel. Or better yet, share this video with someone who bought a home in the past few years and who might need to refinance to help them avoid these costly mistakes. Pitfall number 4, picking the wrong lender. You know, mortgage is a sales game, unfortunately. 100% of the time, someone is selling you, especially if they're not local or referred to you by someone that you trust. Some prey on the uninformed or target veterans, seniors, folks with lower credit scores, using scripts to jack up the costs. They're like magicians, dodging your questions. You know, how much is this loan costing me? Oh, nothing at all at closing. But then they skip the part where they're totally rolling all those closing costs into your new loan balance. You know, a good loan officer, they'll tell you when not to refinance. They'll tell you when it's a bad deal. They'll suggest cheaper options. They'll break down every cost. They're your mortgage wingman, not a salesperson, so choose wisely. And now for pitfall number 5, and this is a kicker. It's not refinancing at all. You know, life's busy, family, work, and who's got time to track rates? And after all those sketchy solicitations, it's easy to just tune everything out, right? So that's fair. But if you had a trusted advisor, you'd just ask them, or better yet, they'd proactively reach out to you. I've met many people who missed the 2021 and 2022 refinance wave. Huge mistake. Just picture this, a $700,000 loan dropping 0.75%. That saves you $5,500 a year of interest. Now, do you know how much that is over 10 years? It's $53,000 in interest. But if you applied that savings to principal, maybe prepay your loan, make the same payment, it jumps to $61,000 saved. Or maybe you take the $321 of freed up monthly cash flow and you invest that in the markets. That would be $73,000 in a decade using a 10% market return. The total missed opportunity in that scenario is $126,000. That's the one that hurts. That could be the cost of your child's college tuition. So don't sleep on a good chance because you're too busy dodging the bad ones. If you don't have time to monitor rates yourself, or you chose a loan officer who doesn't have a defined debt management practice, please click the link in the description to sign up for our monthly Homebot Digest. Each month, you'll get a real-time estimate of the potential refinance savings while better understanding your overall equity position. So there you go, 5 pitfalls to dodge when refinancing. You have timing the market, sketchy solicitations, crazy fees, bad lenders, and missing the boat entirely. Steer clear of these and you'll save yourself some serious cash and a lot of stress. Now, in my next video, I'll go over a few real examples of refinancing transactions so you can better understand the costs and how to determine if refinancing makes sense for you. See you in the next video.